everyone, welcome back to the Gold Technical Analysis session with Mukmik. So, how are you doing? It's been great or it's just so-so? So, today nothing's gonna change much for the buying plan. However, I have a brand new plan for selling. Are you excited? Okay, let's go straight to the charts. Here we go. So, here's the chart and we need to start at the daily time frame, okay? So, in the daily time frame, this candlestick is quite interesting. Why is that? Because yesterday I thought, the price could go a little bit further up because the Friday's candlestick was a very big bullish one. However, yesterday candlestick is even a bigger but being a bearish candlestick. Alright, so today's candlestick could be another bearish one as well, because the yesterday's one is a big red stick and it is not forming any of the reversal pattern here, so the price could go a little bit further down. If you remember, in our daily time frame, we have this important swing here which sent the price up to test the supply zone of the weekly time frame. Okay, so I'll put the supply zone up for you. So there we go. That's the swing low, the most recent one that sent the price up to test this supply zone. Okay, so this swing low is really important for us in the daily time frame. Okay, so if the price can still being persisted above this swing low, the price could go up at any time, because in the daily time frame it is still being an uptrend. All right, so that's for the daily perspective. All right, so we've got our significant resistance as well at around 1800 that the price have tested so many days. How many days? 1, 2, 3, 4, 5. So 5 days that it was trying really hard to to break this resistance, but it can't. So the price dropped down again. That's the resistance and the support that we've got in this daily time frame. Okay, what about the demand zone? Is pretty far, so I would say that we will not use this demand zone in a few days, even in a few weeks. All right, so in the 4 hours time frame, okay, so we've got some more exciting pattern here in the 4 hours time frame. So if you remember, we have this the higher high and the higher low pattern. So the price trying really hard to make an uptrend to go and test the supply again. However, it could not, so the price dropped down here and make a lower low than the previous low. So what we've got here is the QM cell pattern. Alright, we use this quite a lot, so our entry point would be somewhere around here. Okay, so the price is going to be 1791 to 1796 for the QM cell in this 4 hours time frame. All right, what about the buying plan? I would say that I will stick with the last plan that we've got, which is this demand zone. All right, however, yesterday this zone was really beautiful, and it's you can place a pending order there because we have this price action that tells us that this demand zone is really significant. All right, however, yesterday the price came down to around 1772, so we missed around like 200 points to get the order. So I would say if the price coming back down again, you will need a confirming signals. All right, it's the same demand zone, but in order to place an order here, you need a confirming signals for today, unlike yesterday that you can place a pending order. Okay, so that's 1770 to 1763. Let's drop down to the 1 hour time frame. We might see the confirming signals here. So the first signals that we could use, and this one would be the most beautiful one as well, which is the high twice that I use really frequently. So that's the first confirming signals that you could look forward to if the price coming back down. So high twice, make a lower low, and we will go for a buy at this demand zone. You can use the Fibonacci extension to help us as well. So if the price comes straight down, we will have this around the same price that we were waiting. So you might need to enter at around 1770 point something, okay, if the price coming straight down from there. However, another confirming signals that I would suggest you to use is the QM pattern in the smaller time frame. All right, so you can look forward to if the price make a lower low and a lower high, and suddenly the price should back up and make a higher high at this point, and we can use our Fibonacci retracement to find the entry point at 61.8 to 78.6. all right, so that's the second confirming signals that you can use. All right, another one is the classic divergence. I will rate this the last one. Okay, so I would suggest you to use the high twice first. If not, you can use the QM buy, and the classic divergence you might need to reduce the risk if you use the classic divergence to confirm. Okay, so you can use the Fibonacci extension and enter at 127 to 161. all right, and you need to check the RSI as well for the classic divergence. So the RSI needs to make a high or low there. Okay, so that's really detailed for today. Okay, so that's the rough plan that I'll give you. Beautiful. It's going to be really fun. Alright, so I hope you learned something new from this video. If you do, please give it a thumbs up and share it with your friends, and also please click the subscribe button for us. Thank you very much. And if you need the confirming signals, I will send you one, okay, but it would be on our Telegram. So if you haven't joined me, please do so. I'll leave the registration link down below. I'll see you in there. Bye.